Today we're going to start talking about the outlook for the markets we're trading, and hopefully it'll generate some interest, and because the events we're going to be talking about are more current. Okay. Today's session is going to be broken into two different sections. Today's presentation is going to be divided into two sections. First, we're going to talk about political influences that have been affecting the markets. And then second, we're going to talk about some economic factors. Then after we talk about these subjects in general, then we'll look at some individual markets and talk about the outlook for those specifically. Okay, let's talk about market influences affecting the market. In my opinion, the number one influence on the markets today, both whether it's political or economic, is simply Donald Trump. Okay, and basically what Trump did was he made a number of promises during his campaign that got him elected, obviously, and these promises were basically all bullish, would all be considered bullish for the markets. First of all, his biggest promise, or his first promise, was he was going to build a wall between Mexico and the United States. Now, he said that Mexico would pay for it. However, it's become fairly clear that Mexico is not going to pay for the wall, that U.S. taxpayers are going to pay for it. So any money that's spent on the wall is going to be pumped right into the U.S. economy and will therefore strengthen the U.S. economy and therefore make it bullish if he continues to follow through with the wall. Okay, the second main promise he made was to spend money on infrastructure in the United States. The U.S. has basically been neglecting infrastructure spending over the last 20 or 30 years. We've got bridges, railroads, highways, basically crumbling all over the country, and money needs to be spent on these things. Like the money that's spent for the wall, this money will come from taxpayers and also would be pumped into the economy. It would be a massive injection of strength for the economy and would turn out to be bullish for the economy. Okay. The third promise he made was to create jobs. That made him appeal to most of his core constituency. Has been neglected over the last 10 years or so in terms of job creation. So Trump's promise was to create jobs for these people. So that was promise number 3. Promise number 4 was he ran on a promise to repeal Obamacare. That's the health care program that was passed under President Obama. And his promises were to come up with something that would be fairer to all people involved and would also result in tax reductions in terms of revenues coming into the program and everything. So that was promise number 4. Another promise he made was to reduce regulation. And the U.S. is completely overregulated. One example would be Dodd-Frank, which regulates the securities markets. The regulations run several thousand pages, and it makes it hard for small businesses, in fact, all businesses, to conduct their operations. So by reducing regulations, this would be, again, another positive for the economy. Okay. And finally, the one promise he made that's not really bullish for the economy, at least in my opinion, is he's promised to increase tariffs and reduce trade between the U.S. and its trading partners, or at least free trade, and start charging higher tariffs to countries like Mexico and China, etc. As he raises these tariffs, this is going to be, turn out to be a big negative for the economy. So basically what we've got is 5 promises that he's made that it would, if he can carry through with these promises, would be bullish for the economy and therefore bullish for the stock market and bullish for the U.S. dollar. And those promises, to review them, were: 1, he's going to build a wall; 2, he's going to spend money on infrastructure; 3, he's going to create tons of jobs for the U.S. 4, he's going to reform taxes, which I neglected to mention. He wants to reduce taxes. And 5, he's going to come up with less regulation. So all these 5 promises taken together, should they come to pass, should be bullish for the economy and bullish for the markets. The one negative, of course, is any steps he takes toward protectionism, raising tariffs, creating blocks to free trade. All these things would be negative. So let's take a look at what the reality is. And what we find is the promises have collided with reality. What he promised and made it sound like it was going to be so easy to produce, have not been as easy as he thought. First of all, on the wall, he's pushed that back, which he said he was going to start building the wall within the first 100 days of his administration. Instead, he's had to push it back to get a spending bill passed by Congress to allow the U.S. government to continue to operate. The Democrats said that the only way they would vote to pass this bill to let the U.S. government operate would be if he took a backseat to the wall. So promise number 1, the wall has been pushed back. Second, so far he has spent nothing as far as infrastructure is concerned, and it looks like it's going to be 1 or 2 years before that gets started. So that's promise number 2 that's come up hollow. 3, so far he's created few jobs. In fact, he's got a problem with his approach to jobs. His concentration has been on manufacturing jobs. The only problem in the United States, manufacturing jobs constitute only 8.5% of the total workforce. That there's another 91% out there that he's specifically ignored. And he's going to find, I think, and he's starting to find, that creating manufacturing jobs in the United States is not as easy as he thought it was going to be. 4th, as far as taxes are, 4th is they have passed a health care bill, at least the House of Representatives has, that's been supposedly passed with very little thought behind it. And so far it's run into all sorts of opposition from healthcare organizations, doctors, the general public around here. To get a healthcare plan passed in the United States, it also has to be passed by the Senate, and that's going to be something that's going to take months before they get around to resolving that. In the United States, to pass a law, it first has to be passed by the House of Representatives, and the Senate comes up with its own bill, and then the differences between the two have to be reconciled, and finally they come up with one final bill that they pass and send to the president for signing. So far, the health care bill looks like it's going to run into all sorts of trouble in the Senate, so it's going to take a while before that gets passed. As far as taxes are concerned, he has come up with a proposal on taxes, but it's a one-page outline. The key part of it is what he wants to do is simplify the tax codes. And the key part of it is to reduce corporate taxes to 15%. Right now, U.S. companies pay approximately 35% of earnings. It's the highest in the developed world in terms of taxes on operations. So one of the problems this has created is that U.S. companies that operate overseas, outside the United States, have elected to keep their earnings overseas rather than repatriate them into the United States. What Trump hopes to do by cutting the corporate tax rate to 15% is to get these companies to bring these profits back into the United States where they can be charged at a tax rate of 15%. Right now, the estimate is there's something like $2.5 trillion worth of earnings that are being parked overseas and not being brought into the United States. But so far, in terms of getting a tax reform passed, all we've got is a one-page proposal in the Senate, and the House of Representatives hasn't even come close to starting to talk about it. Now, the last aspect is protectionism, and I think anybody that's studied economics will find that generally free trade generates a positive for everybody involved in the trading situation. So free trade is a benefit for all countries involved. Trump wants to do away with this. He thinks that the United States is being shortchanged as far as trade is concerned, and he's going to be pushing toward protectionism. Protectionism involves raising tariffs in terms of other countries bringing stuff into the United States, and it has two problems. One, it's going to cut down on trade, and it's going to hurt exporters from the United States when we have a reciprocity between two countries, involved in the trade process, raising their tariffs and other trade barriers. So it's going to hurt U.S. exporters. The other thing that's really going to get hurt are U.S. consumers. Right now, we benefit from low prices for Chinese imports and other imports around the world. If he starts instituting protectionism, this is going to create a barrier. It's going to create a hardship for U.S. consumers, as they have to wind up paying more for their particular goods. So what we've had is Trump ran on these promises that were really, should he have passed them all, would have been extremely bullish for the U.S. economy. In the reality, though, he's run into all sorts of problems just in getting them passed. Now, he's also got some other problems that don't have to do directly with getting his promises passed, and that's some political problems that he's facing that have cropped up in the last week or two. And one of them is his decision to fire the FBI Director, James Comey. Most people feel that maybe Comey deserved to be fired, but the way Trump handled it was heavy-handed and certainly doesn't help him a lot. It looks like, there's some thought that the FBI was investigating Russian collusion in the elections, and the collusion between the Russians and Trump, the Trump campaign, and Trump firing Comey at this point looks like he's attempting to cover up something. So there's a large body of people within the United States that believe that Trump is lying about some of these reasons that he gave for getting Comey fired. So until it's going to be hard to get anything passed while this situation is hanging over the White House. So that's another negative as far as Trump's concerned. So the result is, and let me show you a chart here. This is a chart of the S&P running back from November to the present, the S&P 500 index. And basically what we've had is, you had a period from the chart starts in the beginning of November roughly and runs almost steadily upwards up to the 1st of March, which was roughly 1 month into the Trump administration, you know. So what the market has anticipated in this period of time from November to March is that these promises that Trump made would start to come to pass and would wind up being bullish for U.S. companies and the U.S. stock market and also the U.S. dollar. But after around the 1st of March, the market has started to move sideways and is actually basically a sideways move since for the last 2 months. And what this simply tells me, at least, is that the market is building in a lot of uncertainty into its trading because of these factors that I mentioned. So it's one thing to keep your eye on as we go forward. The dollar at the same time had shown some steady gains in that same period of time that the S&P 500, that the stock market showed gains, but it too has started moving sideways over the last month or so. So until these uncertainties get resolved, I don't think you can buy the dollar or buy the S&P 500. That you've got to, you know, wait for some further direction from the markets. Okay. Okay. Another political influence that has affected the markets has been Brexit. That's the British vote in June to leave the European Union. Okay, here you'll see in July. This is basically almost about a 9-month chart going back in the British pound versus the U.S. dollar, and you can see in beginning of July last year, we had the vote on Brexit, where the British voted to pull out of the European Union, and that caused a sharp downward move in the British pound versus all currencies, especially the US dollar. Now, what has happened since then is the market generally traded lower and lower, although gradually lower up until October. And at that point, it's just the market has basically priced in the whole anticipation of what's going to happen when Brexit takes place. I think once the shock and the reaction to the vote has been digested by the markets, now everybody is waiting for what's going to happen as to what happens to the British when they have to go it alone in these situations. So again, like in the U.S. with uncertainty regarding Trump's promises, we've got uncertainty as to what's going to happen in Brexit. Now, so the market generally has been moving sideways for about the last 6 months until just recently, Theresa May has declared an election for, I think, the 19th. I think, within the next month we're going to have elections, and the British pound has started to rally after she called those particular elections. And so the prospect looks like the Conservatives are going to win And that'll take some of the uncertainty out of the market, so we can see the British pound start to gain a little bit going into that particular election. And we'll talk about what to do when the election comes in a minute or so. But that's the biggest factor affecting the British pound has to be Brexit and the prospects of the conservative market. Okay. One thing is, as far as, well, we'll talk about the economic performance in a minute, okay? Okay, the biggest factor, I think, affecting the euro right now, or that had been affecting the euro, were the French elections. Let me go over to a euro chart. Basically, as we went into the elections, the euro reflected the possibility that Marine Le Pen, the far-right candidate, would win these French elections, and thereby there was a possibility that she would take France out of the euro. So what we've seen from the end of March to about the middle of April was a decline in the euro, reflecting this possibility that the euro might fall apart once France leaves. However, in April, the polls started to show that following the first run of elections, polls started to show that Emmanuel Macron, who was more of a progressive and more liberal than Marine Le Pen and more pro-business, was going to win the election. So the euro, as a matter of fact, reflected that anticipation. And then when he actually won the election here, we saw a jump in the euro, and basically the euro looks like it's moving higher as we've gotten rid of this French influence in the situation. Okay, the last thing I wanted to talk about in terms of political influences were the effect of safe havens. And somebody asked the question, what happens to political factors? How do they influence the market? Well, they influence it in two ways. One is their effect on the economy and the anticipation for the economy. But the second is what happens when these news events start to scare people that are holding various currencies, like in the British pound or the euro in case of the French elections. And as a result, the money starts to move into safe havens. Now, they're traditionally the safe haven for most money used to be the gold market. We'll talk about gold in a minute, but now what happens is investors start to move their funds around the world to geographically distance themselves from what they feel might be losses in their portfolios. And one currency that had been considered to be a safe haven was the Japanese yen, because with problems going on in the U.S. with Trump and in Europe with Brexit and the French vote, a lot of investors moved their money out of the Western currencies into the Japanese yen. So this situation is the dollar yen, and what this shows over the last 6 months from December through April is the tendency of people to move funds from those Western currencies into the Japanese yen. The Japanese yen has basically moved down considerably. Now, in the last few weeks, unfortunately, move this here. So the yen got down to roughly 109, or it got up to 109 yen per dollar. And then we noticed that the thing has turned around in the last 2 weeks and gone from 109 to 113. And I think this reflects the situation in North Korea because of its geographic proximity to Korea. People have decided to move those funds out of the Japanese yen back into the dollar and some of the other Western currencies. So as a result, we've seen the dollar the yen declined versus the dollar from roughly around the middle of April on.
I just would like to inform you that after this it will be an open session for question and answers.
Right. When I get done talking, then I'll let anybody ask questions, and we'll run it as long as you want. Okay, let's talk about some of the economic factors affecting the market. Basically, the U.S. economy obviously is the biggest economic factor affecting it. It's whatever happens to the U.S. economy drives the whole currency market. And the U.S. got a surprise in the first quarter when it showed that GDP, gross domestic product, only rose at an annual rate of 0.7%. They were hoping for something closer to 2%. Trump, as a matter of fact, predicts that GDP is going to grow at 3 to 4%, but that's never going to happen. Anyway, so we had 0.7%, which was negative for the dollar at the time. That was a big surprise. Also, last week we had an unemployment report that showed non-farm payrolls grew at 211,000 in April. And at the same time, the unemployment rate dropped to 4.4%, which represents a 10-year low. So the question is, as far as the economy is concerned, we want to know what the impact that the economy is going to have on what the Fed does. And it looks like the Fed, even though we had 0.7%, which was disappointing in the first quarter, they still see economic growth as being strong enough, particularly with this unemployment dropping to 4.4%. Traditionally, the economists feel that anything below 5% as far as unemployment is concerned is considered full employment, even though there are 5% of the workforce are not working, 95% are, and they feel that you really can't get much higher than 95%. So this said 4.4% unemployment is really bullish for the U.S. economy, particularly with regard to what we expect the Fed to do. Now, in terms of looking forward, the Fed holds its next meeting of the Board of Governors in the Fed when they decide on interest rate policy. Their next meeting will take place June 13th to the 14th. And right now, everybody is pretty much anticipating that the Fed is going to raise interest rates another 0.25% at that time to 0.75%. So, so that as we go forward between now and June 14th, you should see the market start to anticipate an increase in U.S. interest rates, which would be bullish for the dollar, bearish for some of these other currencies. Okay, as far as the Eurozone is concerned, last week, the Eurozone reported that gross domestic product grew at a rate of 0.5% in the first quarter, which is an annual rate of 2.0%. The other thing they reported is that manufacturing registered its fastest growth in 6 years. And finally, the European Sentiment Index is now at its highest level in 10 years. So all these things are positive as far as the euro is concerned. The one thing about the euro is that the European Central Bank so far has kept rates at a very low level, worrying more about the growth in the economy. I think what's going to happen as these numbers start to come to pass in Europe, that the Eurozone is going to outperform the U.S. economy. And as it does, you're going to see the European Central Bank start to move to raise interest rates. So that should be bullish for the euro. Okay. The third economic factor I want to talk about is China. China reported that their GDP grew at a rate of 6.7% in the first quarter. That's an annual rate of 6.7%, not quarterly growth of 6.7%. But people generally feel that China's overstating its economic growth, that they're making up the numbers, and the real growth is less than that. So unless China can continue to show growth in their GDP, what's going to happen is we're going to see a negative influence because of weakening China demand on commodity prices, specifically crude oil, which we'll talk about in a second. So that's one thing to keep your eye on, is what really happens in China. So in summary, what we've got is the U.S. economy is probably going to start to pick up. The U.S. Fed is going to raise interest rates. I think that the Eurozone economy is going to outpace the rest of the world in terms of economic growth over the near future, and that'll be bullish for the euro. And finally, led by China, I think the developing world economy is going to be negative, or growth won't be negative, but growth will be slower than people anticipate. Okay, let's talk about crude oil. Basically, this is a 5-year chart in crude oil. And what we see happening in crude oil, I think there are 3 main factors affecting crude oil prices. Okay, 2 of them are supply-oriented. 1 of them is demand-oriented. As far as supply is concerned, about 2.5 years ago, the main producers from OPEC, led by Saudi Arabia and Russia, decided that they would increase production and drive prices down. Now, one of the competing factors as far as OPEC and Russia is concerned have been U.S. frackers, fracture drilling. They were producing substantial amounts of oil, and as a result, were keeping oil prices under pressure. So what has happened is the Russian and Saudis primarily decided to increase production substantially, so they would drive prices down to a point where it became uneconomic for the U.S. frackers to make money. And what has happened in that period of time, we saw a lot of frackers go out of business. However, we also see a number that have managed to come through, leaner, meaner so far producers. So we're at a situation now where no matter what Russia and the Saudis do as far as increasing production is concerned, it's still going to be economically feasible for the frackers to continue to produce oil. And over the long term, ultimately what's going to happen is you're going to see the U.S. become completely non-dependent on Middle East oil, and certainly Russian oil, which it doesn't have an impact right now. So those are the two supply-oriented factors. We've got the OPEC and Russia trying to drive prices down. The frackers continue to produce, and as a result, we're going to see crude oil prices continue under pressure from a supply standpoint. From a demand standpoint, we've got to look towards China, and if China is overstating its growth, we're going to see a decrease in demand from China over the next 6 months or so, and that too is going to keep some downward pressure on prices. So in general, with those three factors, with Middle East and Russia continue to drive prices lower by increasing supply, frackers continue to produce oil in the United States, and reduce demand from China, it's got to be negative over the next 6 months or so for crude oil. The one factor that could be positive for crude oil is we're going into the summer driving period in the United States, and that should create some increase in supply and create like a little bit of support under the market. But generally, I look for crude oil to continue to move lower over the next 6 months or so. Okay, the last market I want to talk about is gold. And this is in terms of general, again, this is about a 6-month chart in gold. And basically what we've got is over the last 3 months or so, gold has been in a big trading range. Now I think there are two main reasons for buying gold. One is as a hedge against inflation, as people start to worry about inflation picking up, and so far inflation hasn't been a problem anywhere in the world other than some African countries that are running into problems, and maybe Venezuela, but in general global inflation is not picking up, so that's the negative as far as gold is concerned. The other thing, even if inflation does pick up, like safe haven currencies, you know, people tend to move into those currencies where they can generate the best return. And as we know, gold doesn't pay any interest. The second factor for buying gold is as a hedge in a safe haven basis. And again, for reasons I mentioned earlier, I think that there are better alternatives around the world, whether it's the dollar or the euro or whatever other currency, a better place to put your money than the gold market. So I personally think, and it looks like gold is generally moving lower over the last month or so, and I think we're going to see that gold at least test the lower end of the trading range around 1,200, maybe go below the 1,200 market down to 1,150, but I don't see any long-term positive aspect for gold. Okay, the last thing I want to talk about before I open it up to questions, there were 3 questions posed to me earlier. One is, how do political influences affect the markets? And I think we pretty much covered that, you know, when we talked about Trump and Brexit and the French elections. The second question is, somebody said they wanted to know how do we forecast where prices are concerned. And if anybody sat through my 2 sessions, one on price forecasting and the second on technical analysis, there are really 2 ways to predict prices. One is to try and anticipate events that are going to occur in the future, such as, let's say, on June 14th, the Fed raising interest rates, and try to anticipate what's going to happen to the market between now and that specific event. Now, if more and more people decide or think that the Fed is going to raise interest rates in the middle of June, that should be a bullish factor as far as the currency markets are concerned. Now, the other thing is, as far as technical analysis, if you're looking about when to buy, that technical analysis is the best thing to use in that case. You look at charts, you look for specific support levels, like going back in gold, we found support levels. Hang on here. We found support levels down around the 1140 level in gold, and another support level around 1200. There's probably a support level around 1200. If for some reason, for example, you think that gold is, you want to buy gold, I'd look for some support around 1200 and maybe look to buy at that specific level. So in terms of forecasting the markets, one thing is to anticipate events and figure out what the market's going to do before that event occurs. And remember the saying, buy on the rumors, sell on the news. So what will happen is, if the Fed does raise interest rates, the market will pretty much have that priced in before June 14th. So you would want to buy sometime before then if you're buying the dollar, and look to sell the dollar on the news that when the Fed actually makes that announcement. So buy on the rumor, sell on the news. You try to anticipate what's going on. Okay. The last question that somebody asked was, how can you use currency hedging to protect your prices, I think was the question. And I think you have to be clear on what you mean by hedging. Now, to me, there's only one type of hedging, and that's an importer and exporter using the currency markets to lock in a currency rate to protect themselves against some market moving against him. Now, I've also, my experience in dealing with traders in the Middle East, some people consider it a hedge when you're, let's say you're long the euro, and for some reason you think the euro might go down over the near term, you want to stay long the euro, so you'll sell it for another delivery date. So you're basically long the euro for one delivery date, short the euro for a different delivery rate. And people consider that to be a hedge. I don't. I think once you do that, you've locked in your profit or loss at the point when you sell the euro or whatever other currency you're selling when you think you're putting a hedge in. So basically, to me, there's only one kind of hedge, and that's used by importers and exporters. As far as hedging is involving traders, there is no hedge. Basically, all you're doing is simply locking in a rate. Ultimately, if the market goes lower, you're going to lose on the one you were long on, and you're going to make money on the one you're short on, but ultimately you're going to have to get out of both positions. So to me, that type of hedge doesn't seem to work. Anyway, those are the factors I wanted to talk about. Maybe throw it open to questions now. Roxana?
Yes, sir. Team, we are open with the session. Anybody has any questions?
No questions. No questions.
So we expect lot of accounts and we expect lot of trades.
Well, I mean, does anybody want to know anything about any of the markets I haven't talked about in here? My opinion on those.
Jofi? So we wait for another 2-3 minutes. If not, then we will disperse.
Okay. Okay, there's a question. Somebody said, why is Africa poor? What was that question? Somebody had a question on Africa. Can somebody repeat that? There was somebody said, why is Africa poor considering, and then it went blank. So why is Africa, somebody asked the question, Durant, why is Africa poor considering it has so many resources? And I think one of the factors that's affecting the African markets or the African economy is basically poor leadership on the part of the people running those particular countries. I mean, Africa, like I absolutely agree with you. There are certain natural resources. Africa is more than any other continent involved, and Africa continues to be poor. And I think one of the problems that Africa runs into is corruption among its leadership. Now, this isn't true for every country, but for a lot of countries that, let's take Nigeria as an example. I mean, the oil earnings have been skimmed by the people at the top, and as a result, it hasn't gotten down to the lower levels. So I think, you know, it's this corruption that over the years that has kept Nigeria basically poor, even though it's got one of the leading producers of oil in the situation. So until people in Africa, I won't say rise up in revolution, but certainly do something from a political standpoint in getting out those leaders, getting rid of those leaders that have contributed to the corruption, getting people that are more interested in the people themselves. I think Africa is going to continue to be poor. We're starting to see some improvement in some countries, but generally I think Africa has a long way to go, and the big things that I can see is corruption. Does that answer that question?
Yeah. What questions are coming from your side?
Okay, the answer, yes, thank you, yes it does, we agree.
Why did you mention that? Why?
You want to announce?
Of course.
You
It's a copyright.
I wasn't
Otherwise,
like
Your view, here's the question, in your view, does wait, can you put that question up again? In your view, does the Eurozone something? Somebody just had a question on the Eurozone. Does the Eurozone still have the same power now with the Brexit? I think, as I said, I think the Eurozone in general, after Brexit, is going to continue to show strength in here. I think the country that's going to be hurt by pulling out of Brexit is the UK. So I think Britain pulling out of the Eurozone as far as Brexit is concerned is somewhat negative, but I think the Eurozone continues to have the largest economy in the world as a group of countries. And I think, you know, it's probably going to continue to get stronger as the years go by in this case. I think the threat of the French leaving the euro would have been a real problem because of the trading that goes on between France and other countries in the Eurozone. But I think it's going to continue. I think what's ultimately going to happen is Britain is going to, as far as their Article 50, in terms of how they're going to proceed from here regarding the Eurozone, I think the British are going to have to make some concessions, and we're going to see a continued trade in that thing. So I think Britain's going to be hurt more than the Eurozone is going to be hurt by Brexit. The one thing about the Eurozone is the Eurozone still has strong leadership in terms of Angela Merkel. So as long as she's in, you know, I think the Eurozone is in the strength of the European Central Bank as a legacy of the Bundesbank. I think the Euro still has strength in that regard. And what's going to happen is ultimately a two-way trade between Britain and the Eurozone is probably going to replace the ease that Britain trade would before, and I think Britain's going to be the loser in that case. Does that answer your question?
Thanks, sir. And I really appreciate the questions has been put forward by Assam. So thank you, Assam, too, for making this as a success. Thank you so much, sir.
Okay, thanks. Goodbye.
Bye-bye.